Imagine building a business that governments spend billions trying to stop. Your customers include warlords, terrorist groups, and criminal organizations. Your product can completely change the ultimate outcome of a war. Yet a single shipment can also destabilize an entire region. The legal global arms industry is worth hundreds of billions. But beyond the legal market exists another hidden global economy, one with no stock exchange or public trading floors whatsoever. There is no advertising, no customer service, and no contracts. Despite decades of international sanctions and strict border control enforcement efforts, the illegal arms trade continues to generate enormous hidden profits. So why does this underground market refuse to disappear completely? If the risks are so high, what keeps the wheels turning? Today, we are following the money to uncover the economics. This is never a story that glorifies crime or explains operations. It is purely about money, incentives, and fundamental economic market forces. Examining one of the most dangerous illegal markets in human history. Let us introduce the fundamental difference between legal and illegal markets. The legal trade supplies sovereign governments under strict national laws, while the illegal market diverts weapons directly to prohibited buyers. Conflict itself creates immediate, urgent demand for military hardware supplies, and severe supply scarcity can aggressively drive up market prices. Armed groups and criminal organizations ensure persistent, ongoing market demand. Insecurity, political instability, and weak institutions sustain these black markets. We must focus strictly on economic incentives rather than individual actors. Let us review basic economics. When demand rises and supply drops, prices increase rapidly across constrained and restricted commercial supply chains. Connect this directly to illicit markets and high-risk commercial trading. Higher risks, scarcity, and enforcement costs escalate final sticker prices. These factors create powerful financial incentives for illegal suppliers worldwide. Now, let us trace how illicit money moves across borders. Money moves through complex shell companies and corrupt financial intermediaries. Cash transactions and hidden financial mechanisms obscure the true paper trail. Financial opacity makes international law enforcement tracking exceptionally difficult today. While some participants profit, the wider economic costs are enormous. Destroyed infrastructure halts domestic productivity and long-term capital investment growth. Disrupted trade routes choke the local and regional commercial supply chain. Displaced communities lose their livelihoods and traditional economic production capacity. Higher insurance costs penalize every legitimate business operating nearby. Long-term economic damage lingers long after active fighting finally stops. Why is this illicit trade network so remarkably hard to stop? Governments face conflicting legal frameworks across different international jurisdictions. Widespread corruption and weak institutional oversight undermine enforcement efforts completely. Porous borders allow contraband shipments to slip past checkpoints undetected. Ongoing conflicts continuously regenerate the conditions that feed black markets. No single solution exists to solve this deeply entrenched global crisis. Enforcement alone fails without addressing the underlying economic demand. Who really pays the ultimate price for this shadow economy? Contrast the massive profits made by a tiny number of participants with the crushing broader costs borne by ordinary, hard-working civilians. Soaring healthcare costs strain public budgets and overextend local medical facilities. Massive reconstruction bills drain national treasuries away from productive public investments. Lost human productivity permanently stunts regional economic growth and potential. Reduced economic growth traps generations in cycles of persistent, deep poverty. Let us look ahead toward the future of global security economics. Changing technology introduces new challenges and sophisticated tracking capabilities alike. Stronger international cooperation helps bridge gaps in cross-border law enforcement. Improved tracing of legal weapons cuts off diversion vectors at the source. Advanced financial investigations follow illicit digital assets across the global network. The shadow market continuously evolves alongside modern regulatory enforcement efforts. The illegal arms market persists because violence is fundamentally profitable here. It thrives where economics, conflict, weak governance, and demand cleanly intersect. As long as wars continue, institutions remain fragile and easily compromised, and profits outweigh perceived risks for illicit participants across the board. This black market will remain extraordinarily difficult to eliminate entirely. Understanding the underlying economics does not justify these horrific illegal activities, but it explains why governments continue to struggle against trafficking networks. This entire story is not just about physical weapons and bullets. It is fundamentally about economic incentives driving human behavior globally. And until those economic incentives change, this destructive cycle will continue. Let us examine how local black market distribution networks operate underground. Small-scale smugglers rely on porous borders and informal transport routes. Bulk cargo often hides inside legitimate commercial shipping containers daily. Customs agents inspect only a small fraction of all global cargo. This low inspection probability reduces expected transport costs for smugglers significantly. Lower transport risks mean higher profit margins for successful illicit syndicates. Broker networks connect distant manufacturing origins to volatile conflict zones seamlessly. Middlemen charge steep brokerage fees for navigating complex international sanction regimes. These fees represent the premium paid for operational secrecy and security. Shell companies obscure the ultimate beneficial ownership of transport vessels completely. Flag hopping allows cargo ships to evade maritime patrols and jurisdiction. Offshore banking centers facilitate anonymous transfers of high-value capital funds. Cryptocurrencies and alternative payment systems offer new layers of financial privacy. Yet traditional cash remains king for final localized transaction settlements. Liquidity is essential when operating outside formal banking system protections. Counterfeiting and fraud also plague these unregulated underground financial networks. Trust among traffickers is enforced through violence rather than contract law. Reputation and past reliability substitute for legal enforceability in syndicates. When enforcement pressure rises, supply chains quickly adapt and reroute. Cartels and traffickers exploit geopolitical rivalries between major global powers. State-sponsored diversion programs sometimes supply black markets with surplus military gear. End-user certificates are forged or manipulated to deceive licensing government authorities. Corrupt officials accept bribes to look the other way at checkpoints. Institutional weakness creates an environment where rent-seeking behavior flourishes unchecked. Warlords tax local economic activity to fund their ongoing weapons procurement budgets. Natural resource extraction often finances the purchase of illicit military supplies. Blood diamonds and conflict minerals feed the global black market finance engine. Extortion and protection rackets generate steady cash flow for insurgent groups. The shadow economy sustains itself by embedding within local civilian commerce. Civilians often depend on informal black markets for basic survival goods. This reliance makes uprooting illicit networks extremely complex for local authorities. Eradicating supply without alternative livelihoods simply drives communities deeper into trafficking. Economic development programs play a vital role in reducing local demand. Job creation reduces the pool of willing recruits for insurgent and criminal groups. Education weakens the narrative appeal of violent extremist organizations over time. Strengthening judicial institutions ensures accountability and deters corrupt intermediaries effectively. Transparent governance reduces the opportunities for rent-seeking behavior in public office. International intelligence sharing dismantles financial pipelines before shipments ever occur. Satellite surveillance monitors maritime choke points and detects dark vessel movements. Cryptographic supply chain tracking ensures legal weapons never leave authorized custody chains. Biometric stockpile management prevents military armory leakage into local gray markets. International arms embargoes penalize violating states and restrict illicit trade volume. Targeted financial sanctions freeze assets belonging to known weapons traffickers worldwide. Customs modernization programs equip border agents with advanced, non-intrusive scanning tech. Artificial intelligence analyzes vast transactional data sets to flag suspicious trade anomalies. Machine learning models predict trafficking hotspots based on historical conflict patterns, yet traffickers continuously adapt their tactics to bypass new technological barriers. Adaptation is the hallmark of any resilient black market economic system. Policymakers must maintain constant vigilance against evolving illicit procurement networks. Static regulations quickly become obsolete in a rapidly globalizing commercial environment. Agile regulatory frameworks allow governments to respond swiftly to emerging trafficking trends. Public-private partnerships harness industry expertise to secure commercial shipping channels effectively. Logistics companies share proprietary data to help authorities intercept contraband cargo. Financial institutions implement rigorous compliance checks to block illicit money laundering. Know Your Customer protocols make anonymous shell company creation significantly harder to accomplish. Whistleblower protection programs encourage insiders to expose corrupt procurement schemes safely. Investigative journalism brings hidden shadow market operations into the public spotlight. Civil society organizations advocate for stronger transparency laws across all nations. International treaties establish baseline standards for conventional arms transfer control accountability. Peer review mechanisms encourage compliance among signatory states facing enforcement challenges. Diplomatic pressure deters rogue regimes from acting as open trafficking hubs. When diplomatic tools fail, targeted economic penalties raise the cost of non-compliance. Economic leverage remains one of the most powerful instruments in statecraft. However, sanctions can sometimes harm vulnerable civilian populations more than intended targets. Smart sanctions aim to minimize collateral economic damage while punishing bad actors. Humanitarian carve-outs ensure vital aid reaches populations trapped in conflict zones. Balancing security imperatives with humanitarian needs is a delicate policy challenge. The overarching goal must always be the systematic reduction of armed violence. Achieving this requires addressing the root economic causes of instability. Without economic alternatives, conflict remains a tragically lucrative enterprise for some. Changing the calculus of conflict means making peace more profitable than war. Infrastructure rebuilding creates sustainable jobs that compete directly with insurgent recruitment. Trade integration fosters regional interdependence that discourages violent military escalation. Economic diplomacy builds bridges where political hostility creates deep divides. Understanding the shadow market empowers policymakers to design smarter intervention strategies. Knowledge of market incentives transforms vague aspirations into concrete security solutions. The illegal arms trade is ultimately a symptom of deeper global fractures. Treating the symptom alone will never cure the underlying systemic disease. We must look beyond the battlefield to the invisible hand of market forces. Incentives dictate behavior, whether in Wall Street boardrooms or war-torn alleys. Until those fundamental incentives shift, shadow markets will continue to adapt. Governments, economists, and global citizens must work together to rewrite the rules. Only by changing the economics of conflict can we hope to end the cycle. The story is about incentives, and until they change, the cycle continues.